Good morning, traders. It's 8:02 a.m. Chicago time on Monday, the 8th of February, 2021. This is episode number 1933. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to start off by saying that you will never get a solicitation from me via Twitter or otherwise for crypto or anything like that. So I'm aware of two accounts that are impersonating me on Twitter and are soliciting followers to trade crypto at some outfit. I guess they can't raise business but to cheat. But if you do get something that looks suspect to me, be you're more than welcome to direct message me on Twitter or to email me through futurestrader71.com, and I'm happy to get back to you. So today, what are we looking at? Here's the Convergent Trading pre-market summary sheet. This morning, allocation is to risk yet again. We've pushed all-time highs. We actually tested 3,900 and a half in the S&Ps. Again, money is moving again still into the indices and out of treasuries. We're seeing the 10-year making new lows, and the 30-year below settle. It's pretty tight. The market has so far, the S&P has traded 163,000 contracts and 15 points. And 15 points with 100% of the inventory being above the prior day's close, making it 100% long. The profile is balanced after Friday's super balanced profile. And that's just how she rolls. We're continuing to push higher. Of course, several things on the news front helping that along. And you can see the reaction in crude. Basically, crude, I think, is almost back to pre-pandemic prices. And so that's an indication of the global economy picking up. So that's where we stand. As I said, I'm not going to spend much time on this. I'm going to dive right into the trading aspect. You're welcome to find this pre-market summary sheet by following the account twitter.com/conv trading, and you'll get this about 10 minutes before 8 a.m. Central, 9 a.m. Eastern with a summary. We'll continue to enhance that sheet. Here's what I expected on Friday. Friday open auction, and then I was looking for a push down, and I drew this green line here to represent the prior day's high. I was looking for it to pull into the prior day's high, consolidate, and I was really looking for a push at least to Thursday's point of control. I mean Thursday, now Friday, because this is Friday. We're reviewing Friday. Expected a push at least to Thursday's point of control in the 38.57 area before the bounce. So the primary scenario, the thing you notice here is the prior days, the primary scenario is always running away from balance, right? We had the same scenario on Thursday morning using Wednesday's trading, and in that we were looking for a push higher. Friday was the opposite. We're looking for a pullback. We're looking for a push lower, with the prior high being the first key obstacle, and then expected it to fall back into the range. Here's what actually happened. This is Friday right here in a nutshell. Very tight range, but we had a bit of an open auction here. We tested up, tested down. The opening swing is that high and that low. We ping pong around, and we are responsive just as expected. we go back to Friday's high to the tick, before we get the largest up rotation of the day, 14.75 points right through the mid VWAP. My expectation here is a bounce, pullback, consolidation at the OS low. We had the OS low, VWAP, and mid all at the same price. Expected it to struggle here, fall through, and continue down into the 38.55 point of control of the prior day. That would have been scenario one, but the market had different ideas. It pushed back up and then just consolidated for a while before breaching the IB high, giving us the IB stat, and then falling back in the middle. And you could see that on Friday, our point of control, mid, VWAP, all of it was stacked on top of each other. And we built a high volume node up here, a composite high volume node, and overall big B for balance, with some pretty decent kurtosis here on this profile. You look at this profile and it's just very, very sharp, right? We didn't do all that much volume on Friday. So there's the profile. We didn't do all that much volume on Friday. I think is 0.8 or 800,000 contracts versus the normal 1 million to 1.1 million in the day session. And you have this high kurtosis, or a lot of compression. In other words, a lot of the volume is in a pretty tight range. So it was a pretty rough trade. Pretty much didn't really do anything. Didn't do anything to discover new prices. While it was going sideways, the delta, again, a seller. Again, pushing down. As price was continuing sideways, delta was negative, and we expect that at new all-time highs. It's just the way it is. It's either hedging or covering of positions or long liquidation on the way up, or whatever it is, we can't tell. This brings us into this session. Only 164,000 traded, about 15 points of range, which is okay. We've seen better ranges in the overnight session, but that's where we stand here. And for us, we opened above the prior close, tested down, up, and then started to continue up, and we hit the 3,900. We pushed the 3,900 by 2 ticks at 3,900.5, and then from there we sat sideways until the European Open, which was right in here, and then started to sell off, and now we're balancing. The profile here is not pretty. It's a box profile. It's a box profile, like it's just a weak high, first of all, and then prices that are quite even with a taper at the bottom. There's really no clear consensus here on pricing, and it appears to be attacking what was the point of control up here, which has shifted down from this activity. So I'm trying not to use tweezers to pick this thing apart, because it's just there's so little here. But what we have is a market that has continuously consolidated, pushed up, consolidated, pushed up, consolidated, and it leaves us with a lot to be desired today. The big thing we know is that inventory is 100% long. And that's what we're coming into today with. Looking at the overall picture now that last week is done with, looking at the overall picture, we see that we left last week between Monday and Tuesday, we left a nice little gap. And then on Friday, we opened up high, but we closed the gap zone. And finished pretty strong. This is where that MC high volume node comes from. right up here. That MCHVN is at 38.80.50, 38.80.50. I expect that to be a magnet below if we decide to drop. We essentially last week spent a lot of time just in price discovery. One time framing up on the daily, higher lows, higher lows, higher lows, expecting that to continue. And overall, the market's in a brutal uptrend for anybody that has reason to be short. But as it pushes up, again, I just keep highlighting this until it's kind of balanced itself. As it pushes up, we see the delta moving down. Like Friday, new all-time highs, and it breaks the delta low down here. And so there's a lot here that's working against anybody that's looking short. Obviously, the vaccine's getting good distribution, hitting records. I believe the state that I live in, Illinois, hit a new record on number of vaccinations. I think Saturday hit a new record on number of vaccinations on a day. I think it was 49,000 vaccines pushed out to Illinoisans on Saturday or Friday. So this the fight against the vaccine is really progressing well. There's a lot of effort here, and the market's just anticipating between the stimulus, the reopening of the economy, and so on and so forth. I guess it's just looking higher and higher. And of course, so much money flooding the market and lifting and carrying a lot of these companies. So the stock market, one thing to remember, and we saw this very, very starkly last year during the depth of the pandemic. There's an important distinction that we all have to make as traders between the economy and what is going on in the economy and the stock market. These things are not necessarily directly correlated. And so, I have to catch myself inferring correlations between the two. So that's where we stand. There really isn't all that much I can offer in terms of insight when the markets are pushing to new all-time high territory. I don't have anything to lean against. In other words, we're in a new auction, new price discovery. I see no old prices to compare against. So we are back to the standard expectation. When we have this, there's a standard expectation that Newtonian, call it Newtonian, but an object in motion shall remain in motion as long as you don't apply a new force on it. This is kind of the principle here, that we're not going to fight a trend when we're making new all-time highs. So what are we looking for today? For today, overall, 100% inventory. So immediately, the expectation is an open that pushes, looking for a pullback, probably down into the overnight point of control, 92.50. The overnight point of control, a potential dip below there, but overall looking for the market to continue to squeeze higher into this measured move. We do have, the thing to note is we do have the 3,900 above us, so even if we poke through, I'm really not looking for this to push much. Unfortunately, I'm expecting a relatively dull day. Would love nothing more than to be wrong about that, but I'm expecting a pretty dull day, much like we saw on Friday, new all-time highs, squeezing. Again, we do have the century figure, the 3,900 above us, expecting that to provide some resistance. There's a multi-measured move up here. There are several levels that coincide right above the century figure, pushing us into 39.02. So I'm looking for a test of 02. Usually it goes to 02.04 before it starts to fall off. Secondary, open, squeeze higher. The impulse this time would be down, brings us into responsive selling, and then we start to battle at the prior day's high and move into the 3880 MCHVN and the prior point of control, consolidate here, potentially push to 75 before the bounce. This is completely responsive. This is a market that's balancing the books. It is early in the week, so not sure how well that'll happen, but in either case, we're opening in a gap up. We are in a gap situation here, so gap rules apply. We're going to have to wait to see if the gap, if the traders are responding. In other words, if they open and sell their positions, sell their positions back and bringing us responsive. In that case, we're looking to get short back into the prior range. Or if we open and we're unable to find sellers at all, which means that we are likely to crawl again. Scenario 1, crawl up to 3,900 half, take out the overnight high, and then push into 3,900, 02 and 04 as the next big area to test. Again, there's a measured move target up there. Not sure if it'll hold. That's a mathematical projection, so who knows. But I'm going on the principle that the delta is really not that strong here as we push into new highs. So expecting a grind and expecting some dull trading. Folks, this is my least favorite kind of market. This is my least favorite kind of trading. It's just this low range, low volume, low rotation, low volatility squeeze. And that's what we have. Good luck today, and I'll catch you tomorrow morning. Take care.